Bloomberg Audio Studios.
Podcasts, radio, news.
Governor, thank you so much for speaking to us. So you dropped the upside inflation skew in May. It's now back. How much do you worry about trade wars and tariffs?
So the skew is a different one now. So we had an international skew on before, which was really to do with the Middle East, actually terrible events in the Middle East and what could be the economic consequences of them. Now, I don't for a moment want to underplay, say the terrible events in the Middle East, but the economic effects of them have been nothing like what we feared they might be, or indeed actually what, of course, history sort of had suggested they could be. So as for now, but we have to watch it very carefully, that has somewhat developed as in a much more stable fashion. We've taken that skew out. However, we've now got a domestic skew, really, because we've got one view, which is the sort of modal, the most likely view, which is quite a sort of benign, if you like, continuation of the process of coming back to the inflation target on a sustained basis. But there's a second view, which says maybe there's some more what I call structural elements to this persistent inflation story. Maybe the non-accelerating rate of unemployment's gone up. We don't have strong evidence for that, but different members of the committee put different weights on it. And so that's the sort of the current skew, as it were. It's a different thing.
But Governor, how much do you worry about public sector wage increase and even private sector wage and that filtering through to inflation domestically? Well,
in our framework, we regard private sector wages as, if you like, the leading thing, because they directly affect the productive economy. They directly affect the costs that go into inflation. But public sector wages are relevant because obviously they can have an effect on competition in the labour market, and they have a demand effect because people receive them, and they can have something of a signalling effect as well. So we do watch them. What I would say, of course, is that the government's intended settlement of the public sector wage round is actually, as they said, very much at the private sector average earning level. We will get the full story when we get the budget on the 30th of October, so we're not going to take any more view up until then. We did, we did get a sort of proverbial back of an envelope out when the Chancellor made the announcement and said, well, obviously you've got to start with, there was an assumption on this settlement built into the budget earlier this year, which we've got in our forecast. So he said, let's look at the increment. If you do the sort of mechanical sort of back of the envelope, what does it mean for inflation? And the answer actually is it's a small second decimal place number.
But Governor, so what needs to happen for you to cut again? Is it actually a surprise to the downside on inflation, or just following the forecasts?
Well, one of the things we've done today, actually one of the important things, is set a sort of framework out for explain how we're thinking about it. So I would say two things to your question. It's a great question. One is, I think, as the answer to why did we cut today? Well, we were looking for, in a sense, for sort of confirmatory evidence. We weren't looking for something to change necessarily. It was confirmatory evidence. And we had that. I think we had, certainly in my own view, is we had that. But we will be looking at this framework and saying, are we seeing this sort of rather more benign process which we can sort of further confirm? Or does this sort of structural issue, which is why we've put this sort of risk in, that maybe COVID, for instance, has changed some elements of the structure of the economy, which is going to make the thing more sort of resistant, if you like, to measures to get inflation down. And that's the judgment we will have to keep coming back to.
Where do you think rates settle? Is 4% restrictive?
We don't have a number on it. What I would say is this. I think it's reasonable. Don't expect we're going back to zero, because zero was the product of huge global shocks, starting with the financial crisis, then obviously COVID as well. I think to get to there, something really bad has to happen that we're not currently expecting. So it'll be somewhere obviously in between. I think we've made a big point of saying policy is currently restrictive, so you can deduce from that we'll be lower than where we are today, but I think it's very clear that we're not going back to zero.
Governor, the government has said it will borrow an extra £16 billion this year. Does that change the calculus around rates?
Well, I'm going to wait for the budgets on the 30th of October to see the full picture, because we always condition on an announced fiscal policy. That's what we will see at the end of October, and we'll sort of put it through the machinery at that point.
So the Fed, the ECB, the BOJ are all adjusting policy. And that's very clear, and that's changing some big change in foreign exchange markets. What are those, what of those elements are actually important to you and BOE policy?
Well, we obviously don't have any target for the exchange rate. That's all a long way in the past in terms of that sort of thinking. But obviously, the exchange rate feeds through in terms of financial conditions. We've seen some appreciation of sterling since we did the last report and forecast in May. Sterling has appreciated. We fed that through, as it were, so it changes import prices and so on. And that's how we tend to look at it, actually. I would say recently, over the last four or 5 years, actually, in the sort of transmission of mechanism of monetary policy, exchange rates have not played a very large role. And I think the reason for that is because we've all been facing essentially global shocks. So these are not sort of specific shocks that affect one central bank but not another. We're all in the same place,
but
really.
Could that change with dollar dynamics?
Well, it could always change. I'm not predicting any change. I think we have to just keep watching that carefully.